Hello, crypto nerds and brave hodlers of the world. This is Carlos, your host from d-core, the decentralized objective research engine. At d-core, we specialize at creating institutional-grade research for capital institutions to find the true innovators and disruptors in decentralized ledger technologies. As such, here on our YouTube channel, I personally interview the leaders and great minds shaping this space. Today, we have a very special guest, Ilia Drozdov, the co-founder of Finery Tech. Finery Tech is a crypto liquidity provider catering to a variety of clients, such as hedge funds, OTC desks, crypto exchanges, and capital institutions, among others. So, without further ado, Ilia, welcome. How are you today?
Perfect. Thank you for a warm welcome. I'm proud to be here, and hello to everyone.
Well, since you're the first guest that we actually have that is a capital aggregator, I mean a liquidity aggregator, would you like to tell everyone what is, in your own words, this a liquidity provider? Why should people know about you, and what's interesting about what you do?
Well, crypto liquidity is a special topic. It's much different from the, liquidity in equity market or FX market, because the crypto liquidity is truly decentralized in a sense. It means that this is fragmented. It means that every buy-side firm or any buyer that would like to buy like a significant amount of crypto assets or either purchase or sell them, they need to find the places where the true liquidity is. And given the fact that the liquidity is decentralized, it is like a notorious task, and you need to have probably connections to a number of venues. Usually there are two groups of liquidity sources. The first group is centralized exchanges. We all know them. And they are also notoriously known for their wash trading fake volumes. And you really must be cautious when choosing the right centralized exchange to trade on. Another group of liquidity sources is OTC trading desks, so-called liquidity providers. So our product is actually somewhere in between. We are trying to we have created a solution that try to make a bridge between the two groups, so that we create the network for liquidity providers to trade both with one another and for buy-side firms to access this liquidity and benefit from better prices at the end of the day.
When you talk about wash trading, what do you mean by that?
Wash trading is the illegal practice which results in inflated volumes. So there have been a number of researches so far. The first one was published in spring 2018 about the wash trading activity on some of the leading exchanges. And the research has shown that in some cases, up to 90%, even more, of the reported volume that you can see in the CoinMarketCap, CoinGecko, or other market data aggregator websites is inflated. It means that these trades have never existed. And this is just the taping the volume. That's it.
And also in practical terms, what would these people get from inflating these terms apart from what you just mentioned? Are there like I guess in my mind what I'm trying to ask is, are there illegal activities that are being hidden under here? If so, which kind of activities, or is it another type of marketing ploy? What's
Right.
happening here? Okay.
I guess that the main point here is just to be ranked higher in some aggregators like CoinMarketCap, right? So the more volume you have, the better the higher ranking you have. Thus, you will be able to attract more users because they will see you every day on the top, 10, 20 rows. The second point here is listing fees. Probably this is not so popular right now, but it used to be really popular like a year ago, 2 years ago. And most of the fees actually for these exchanges were not from trading because there were a little customer base and real trading volume. But they did charge high listing fees for those issuers of tokens, those post-ICO projects.
Okay. I I guess like in many people's minds, including mine, it's important to clarify what it actually looks like to be in the process of collaborating with a liquidity provider. So of course we all get that liquidity is very important in the crypto market. You want trades to happen fast, you want trade to be cheap as well, because if liquidity is low, then everything gets more expensive. How does it look on your side to collaborate with a new party? What would what's the process like of starting providing liquidity?
Right. So first of all, we need to define what liquidity is. So for many people, this is just the volume, trading volume. And as we mentioned, due to wash trading, this is not the best metric. It's just one of them. The better metrics are like market depth, and say such websites like CoinGecko has already started to provide this metric, and it will show you the depth of the order book of a particular exchange. It helps you to filter out some of the rug exchanges, but still there are some exchanges that just place orders and there is nothing behind them. So this is still trading against the house, so to say. The real liquidity metric is the market depth, which is instantly accessible. So you see these levels, you hit these levels, and you get the price that you've just seen. Not any other price. We're speaking about slippage here. In OTC market, the trading, in contrast to centralized exchanges, is non-anonymous. So you always know with whom you trade. So this is a kind of peer-to-peer trading, which is why if you would like to deceive someone, it will be, it will be found out just in a second after the trade, and your counterparty will come to you and say, guys, I see this price 10,000 and I executed it and I bought for 10,010, for example. My slippage is like 10 basis points. This is too high. What is going on? And you will need to explain it. So the environment itself for OTC trading makes it necessary to create a trustful environment, a trustful relationship between the parties. So we are, as a network, as a digital asset liquidity network, we are somewhere in between OTC trading desks, liquidity providers on the one hand, and on the other hand, liquidity takers, consumers. Liquidity consumers are not retail clients in most cases. We serve only B2B segment, but they can be also family offices, hedge funds, corporations that would like to buy or sell crypto processing firms, a lot of them, some smaller exchanges that would like to source liquidity for their operations from some bigger players. So we facilitate the communication between the two. And our sales point is that, guys, the messages are a bit different from liquidity providers and takers, but probably if I'm speaking about takers, the most important sales point here is that come and get better prices. In OTC market, the prices are like for big amounts like even $10,000 or even more, they are better than on centralized exchanges. And it can be easily explained. In centralized exchanges, there is an anonymous central limit order book. Everyone trades against everyone, and also everyone competes with everyone. It means that there are some arbitrageurs, high-frequency traders, and everyone would like to make profit on the trading flow. If you are a market maker and you would like to provide as narrow spreads as possible, you will still be trading with this so-called toxic flow. And if you lose money, you will make this spread wider. If you're a liquidity provider, in contrast, you know with whom you trade, and you know that your counterparty is not a high-frequency trading firm. This is just, I don't know, a hedge fund that would like to buy, I don't know, 2 million positions in Bitcoin or Ethereum, for example. And for this, in this particular situation, you will be able to provide narrow spreads, thus providing better prices for the end customer. So this is the main point, better prices. And our network allows aggregation of the prices across multiple liquidity providers. So a taker of liquidity connects to our network in order to benefit from the aggregated liquidity across number of LPs. But still, this is a peer-to-peer trading. Once the trade is done, you know with whom you have traded, and you will be able to settle it directly with LP1 or LP2, etc., etc. And this is also customizable, so that You can trade with LP number 2 today, tomorrow with LP number 3, but you can customize it the way you'd like to.
And from regulatory perspective as well as from a technological perspective, what do you need on your side to be able to perform these tasks?
Right now, we are not a regulated company, and actually our aim is to be unregulated, remain in the unregulated space, and remain just a technological vendor. But in contrast, the users of our platform or our network, they are in most cases regulated entities. Currently, we have a client base with a regulation or authorization from the Netherlands, UK, Switzerland, a lot of companies from Estonia. And they must have the regulation in place in order to serve their clients. But we focus on allowing the communication about them, about the order execution. Actually, we never touch client funds, so there is no pre-funding needed. This is purely peer-to-peer trading. So you can imagine like a Telegram chat, which is quite popular still in OTC market. People ask for prices, they make a trade via Telegram chat. This is still very, very popular, tool for trading. So our tool for trading is also, kind of Telegram chat, but it has also the graphical user interface. But like in our case, 99% of the trades are done by API, and the edge of the platform is that we have managed to create the technological solution that allows trading parties to trade in a convenient way. It means that, well, everything that you can see in the graphical user interface, but creating the API keys, is possible to do via API. It means that you will be able to automate 100% of the operations and having exactly 24/7 per 365 trading and settlement without any interference from human beings.
And okay, it's very. I think it's the first time that I hear on this show, like so publicly, we are completely unregulated. So, do you get any? Do you get any backlash when you're talking to potential clients about this? Do you get any? Do you get any concerns from the public when it comes to being unregulated?
Well, we do have a legal opinion. We obtained it a year ago, and now we are working with the legal team in Cyprus, where our entity is incorporated, to get another legal opinion given an upcoming regulation in the European Union called Markets in Crypto Assets Regulation. We definitely follow the rules that are applicable, but still, our aim is to be a technological vendor. We'd like to provide technology for the regulated users. If something changes, or the regulator, or I don't know, our legal team will advise us that, guys, your activity is multilateral trading facility in terms of a new regulation, then we will definitely follow the rules.
The new regulations from the European Union are quite a special thing, right? No one is, of course, no one can know, despite the text being pretty public, no one really knows how it will look like when it comes into application, right? People are looking into this and thinking, okay, this is what the European Union is actually trying to do, but in the end, it never looks exactly like it should do in the paper. So, what are your expectations for these regulations when they come into place?
Well, we have already faced some adopted regulation in some particular European countries. Say Estonia is probably the most democratic regulation within the European Union, but say there is also Germany, and there is some guidelines from BaFin, the German regulator, that have considered Bitcoin and other cryptocurrency a financial instrument of a special type, but a financial instrument. Thus, such regulation as MiFID II is applicable here, and it means that in order to apply, in order to comply with this regulation, you need to have like a license, the approval from the BaFin, which will cost a young startup just a fortune given their budgets. So it's like it's really a problem for the innovation in this space. But if we're speaking about the new proposed regulation, it is overtly stated there that they will treat particular cryptocurrency in a special manner. Say Bitcoin is the one type of a cryptocurrency. A security token might be a financial interest because it has the features of like equities and other financial instruments. Utility tokens are another example of it, and thus different application of regulatory requirements is supposed. And I think this is a really good move forward. This is a right balance between the regulation and protection of like retail customers, first of all, and the fostering of innovation. And again, in our case, we are a B2B platform, so we don't serve retail customers, and the users of our technology, they do, which is why they are regulated by the regulator in their local countries.
Of course. And when you're a technology vendor, I guess like one of the most complex parts of being able to provide crypto liquidity is being able to provide broad crypto liquidity, right? Being so many different coins and in the way things work with different blockchains, etc., you must have to interact with all of them in a very different way. How is that process like?
Frankly speaking, we don't have this long list of different coins. So we have right now around 3 stable coins and I guess around 10 crypto assets, most popular one. And this is the specific of the OTC market, I guess, to focus on the most liquid coins. And probably not in terms of like top 10 or top 20. The criteria here is the like average monthly or daily volume in these coins, and the development of the crypto markets has shown that the number of such coins that are interested in the over-the-counter market is growing, and that's where we'll be aiding these tokens. But actually, in our case, our platform is kind of asset agnostic. If a liquidity provider can support both streaming the prices in a particular token and settling it post-trade, then we will definitely add a new token, no problem. So it depends on a liquidity provider's network that we have connected to our platform.
And when you talk about the top 10 more common cryptocurrencies, I guess we can all kind of think which ones they are, but you only incorporate 3 stable coins, which are?
USDT, USDC, and DAI.
Okay, very good. Yeah, there is a big topic around stable coins nowadays, right? And particularly with USDT, we've never been completely sure about what's going on in there. Is there any concerns on your end about this particular one?
Yes. Well, I can't tell anything on behalf of the company, but my personal feeling that, well, I prefer say USDC to USDT because of some, shadow history of this coin and some, questions that haven't been answered so far. But if we're speaking about, truly crypto stable coin without any central issuer, this is like DAI. In these terms, well, DAI is definitely my choice if we're speaking about truly decentralized stablecoin, right? But USDT is still very, very popular, and there is high demand for it, which is why we just support it because there is demand for it.
No, and I guess in your case, particularly like doing what you do, it's more than reasonable and more than usual that you would have to incorporate USDT. I think it says something about the crypto mindset and about the way things are still in early days, right? That even though we know this is not fully, no one has fully formed their opinion on USDT, we are still pushing it because it's part of the adoption process of cryptocurrencies.
Exactly. I think that tradition also plays its very important role here. Say if you're speaking about like spot FX market, there is a place where the price discovery for euro dollar is. happening, and there is another ECN where the price discovery for, say, for example, GBP USD is happening, right? And this is just a tradition. This is not the technical or business advantages of a particular trading venue where this price discovery is. This is just the tradition because the market players get used to this. Probably the same is happening with USDT. It has been the first or one of the first stable coins there, and it is still really popular, which is why it will be really difficult to overcome it. Probably USDC on the right road, and we see the trend that the share of USDC is growing, but still they are far behind USDT in terms of adoption.
And of course, just like Bitcoin in general, or just like anything, the more something stays in the top of the podium, the harder it is gonna be to take them off of the
Exactly.
I well, we're recording this on November 5th, and Bitcoin is rallying amongst a pretty turbulent US presidential election. Something that is quite surprising to some people, something that a lot of people are using as a talking point to say, I told you so, as you can see on Twitter. So, what are your thoughts about this? Why do you think we're seeing this growth all of a sudden?
First of all, I'd like to highlight that it is the Bitcoin that is growing. So the prices of other coins, crypto assets, they are like a bit lagging behind,
Right.
or being driven by the growth in Bitcoin price, and the market dominance of the Bitcoin is still growing. My personal feeling is that there is some institutional players that are very cautiously entering the market with their huge interest. They probably trade with some OTC players, not on centralized exchanges. What we see is definitely not the retail hype when people just buying, selling, and trying to open new positions, which is why we don't see any spike in volume or volatility. This is just the growing of a price of Bitcoin, as if a huge player is purchasing a huge amount of Bitcoins via like a network or a couple of OTC trading desks that have the algorithms in place, being able to smash this volume across exchanges so that not to push price very high. And this is done in a professional manner. This is my opinion. So we have been speaking a lot about institutional money coming into the crypto space, but probably this is the case when really big money is coming to the industry.
And of course, yeah, when another guest from this podcast, Alec Ilixperov, he also made this point that at this point, when you're dealing with such professional traders, they're actually lowering volatility when they're coming into the market, as opposed to just being the crypto hodler original dream that institutional money would come and they would pump Bitcoin over $200,000 overnight. These players are easing into the market in such a way, as you say. But is there any theories or speculation on your end as to why this is happening at this particular point amongst these political climates and this general climate?
I'm not a fan of some theories in this regard. Probably if there is a big financial institution and they have a really huge financial resources and they have decided to invest them in crypto space, probably it has taken them a lot of time to agree on the process, to agree on this investment internally. Thus, it's just the time when they started. So I wouldn't, necessarily bind these price increase with the, presidential elections in the United States or to any other political event. Probably this is just a coincidence, and this is the result of the internal processes. We never know.
We'll never know, but you you sure destroyed a bunch of conspiracy theories right there. So going a bit,
Um,
yeah.
just a small point here to add. Say, in Germany, there are a number of small asset managers that have already started to advise their retail customers to invest 2% of their asset allocation of a traditional financial portfolio, along with stocks, bonds, commodities, to allocate 2% to crypto assets, regardless of the number of the size of the portfolio. Say from 50,000 euros to 2 million, the allocation is still the same, 2%. And the main reason here why so risky asset class is recommended to a retail customer is that we are living in the 0% interest rates, which is why there is no other way just to get some positive return for the investors.
I mean, can you expand a little bit more on this last sentence? There is no way to get a positive return for the investors.
I mean, usually the traditional investment portfolio, like 60-40, means that 60% of the allocation goes to equities, 40 to bonds.
Yeah.
If we're speaking about bonds right now, some of them showing positive, some of them showing even negative return, thus meaning that there is low return for the investor. And when you extract some management fees, your retail customer, your retail client will end up with negative profits for the year. And as an asset manager, you will need to find out what you can offer to your retail customer for them to generate profit. That's why you are here. Otherwise, they will just withdraw their money and won't use your service.
And yeah, this is a topic that has continuing to come up during these interviews, and that's exactly this: that the cost of opportunity for people that are entering investments right now, for of not entering Bitcoin, is now more expensive than the cost of entering Bitcoin itself. So you should pretty much consider it. Still, despite volatility going lower, you should still consider it a wise investment in terms of the potential return against the risk, right?
Right. Exactly.
And going back to your product and going back to your company and what you do, I'm interested because, as with anyone that produces technology, you're competing with people both directly and indirectly, because there are some services that you are eventually trying to replace, or some industry that you're trying to disrupt. So, who do you see as your competition right now, and what are you aiming to get to?
Well, probably the main source where our taker customer base is coming from is centralized exchanges. Definitely, we can show them that the prices in our network are better than the prices that they get after all the fees on the centralized exchanges, given the fact that they do not need to 100% refund their account. This is another benefit for them. And in some cases, the technology also comparable, because as I've mentioned, most of our clients, they are have a pretty solid crypto-related business, and so they support API connection to our service in order to facilitate the process 24/7. But what I do what I'm afraid of is the potential competition from bigger players from the legacy traditional financial system, such stock exchanges or FX ECNs. All of them can add a spot traded Bitcoin or any other crypto asset to their platform. We all know that CME has Bitcoin futures traded there. The volume is still not so high in comparison to derivatives exchanges specializing in crypto space, but still, this is a traditional venue recognized by all financial institutions in the legacy financial system, and there is the opportunity to bet on the Bitcoin. Say there is New York Stock Exchange, or I don't know, like the leading ECN such as EBS from the United Kingdom, adding a Bitcoin USD pair to their offering, and all the institutional players like banks, asset managers, etc., they will go this way, traditional way, because they have already established the relationship with them. This is the real threat. But still, we know that the bigger financial institutions, they are really slow to adopt new technology, to be flexible enough to develop quite, well, the pace of development is slower than the pace of development of startups. So for us, this is the opportunity to be quick enough right now, so that we have the creating a new standard for trading. So there are some liquidity traders, liquidity providers, OTC desks. They connect to our platform, and once we have like a critical mass of liquidity providers on our network, and this is our plan for the next year, then we will have the better liquidity offering than everywhere else globally. Thus, the acquisition of traditional players like asset managers, first of all, from the legacy financial system, will be much easier.
And that's a very interesting point you touched there as a tangent, because you mentioned that your greatest competition, or the greatest thing that you're trying to replace right now, it's centralized exchanges. And is it purely a matter of the price, the way you're not considering decentralized exchanges a competition? Do you think those are meant more to be sort of for, let's call it, smaller players, or for more, yeah, basically for smaller players? And are you not concerned with that particular side of the competition?
Well, right now, decentralized exchanges are still too small in terms of the liquidity that they can provide. And the trading fees, like 30 basis points, they are really high in comparison to what we see in our space. So it just doesn't make sense to use these exchanges. Then if we're speaking about bigger players with money, they probably know what fixed protocol is, how to connect to some New York Stock Exchange. They know this technology, but for them to connect to some decentralized exchange, they will need to use some, to understand the logic of smart contracts, to understand how to operate with the blockchain. There are some custodial solutions that are appearing, and they add some functionality to access the liquidity from the decentralized markets. So there will be an offering there in place, definitely. But there is also another concern about DAX. This is compliance and AML laws. So we all know that there is no, there's a trustless solution. So there is no need to identify yourself when you trade there. And we also know that there have been some cases when the dirty stolen coins have entered the pool and then been mixed and exchanged to some other coin and withdrawn. And this is probably also the important concern that does not allow bigger institutional players to enter this space and to trade there.
Okay, that is very important to have a player in this market such as yourself clarify this, because of course, being in the blockchain space and being in the crypto space, most of the people listening at home and most of the people that are watching this are probably all up for, such as most yeah, like most of us, they're all up for decentralization, and they're all up for these free market kind of solutions. And it's important to know and to learn how to draw the line on where do you need to see centralized solutions and decentralized solutions, and understand that decentralizations is important and it's positive in general, but it has its limits and it has its places where it can start hurting actually the market and the people involved in it. And well, just so we can start closing up this interview, as we're nearing the half an hour mark, well, we already exceeded the half an hour mark. You are now doing this project in the middle of a world crisis, both economically and in many other respects. So how do you see this affecting crypto adoption, or do you think it's actually making a case for the importance of crypto adoption in the midst of so much money printing that we're seeing nowadays?
Well, we haven't noticed, the consequences of the, financial crisis or the economical situation globally. For us, this year has been a really good one with the really high rates of the monthly growth. And I hope that the crypto industry will, at the end of the day, eventually benefit from this. Because, well, we are online, right? What we need is just electricity, computer network, internet. That's it. We don't need any physical presence. You can do everything online. And while some lockdowns and problems with logistics, etc., they will not deadly impact the industry at all. So I think that we are, we are moving in the right direction. I mean, the crypto industry as a whole. My concern is that the topic that you've mentioned, there must be a balance between the regulatory scrutiny and freedom of man. There must be balance between centralized solutions and decentralized solutions. And I guess that the idea here is that blockchain will definitely allow us to remove middlemen and say there are some people that have money and that would like to invest this money. And on the other hand, there are some entrepreneurs that need this money. And nowadays we have a network of middlemen in between that make money and called financial industry. And the blockchain will finally make it possible to invest money directly. Like ICO, the idea was really good. The execution was really poor. And thousands, probably millions of people just lost their funds. But it is not the technology that is to blame. Say digital identity. This is like a topic hotly discussed here in Europe. Will probably make this problem solvable. When you have a digital identity, you can interact with the decentralized exchanges, etc., without any KYC process, etc., because you have everything on blockchain about yourself, and still no middleman is needed. So might be we will be living in such a bright new world like in a couple of years.
And since you're speaking of that, I'm just gonna plug another interview that we did that hasn't come up yet as of now, but will before this one airs. We talked with Monica Singer from Consensus. She's the leader for Consensus in Africa, and she was talking to us right about this project that they have for sovereign identities on the blockchain, for everyone to be able to have an identity. And this is the perfect use case that you're mentioning for these kind of projects, so that you can effectively comply with AML on a decentralized manner, and of course we can prevent all the ugly side of decentralization from happening. Ilia, is there anything else that you would like to leave our listeners with?
First of all, I just like to thank you for this opportunity, for your time, and for the great speech.
Oh, well, it's always a pleasure. And before we close, the last question, the most important one, the one we're asking all of our guests. Do you know who Satoshi is?
It's a secret. I'm afraid I cannot disclose this information. It's highly confidential.
Highly confidential. Okay, if you were to tell us, or you didn't know, what question would you ask him if you could do only one?
I would like to learn more about the rationale, about the reasons why he or she or they have developed this blockchain protocol.
Very well played on the very well played on the not knowing part. Okay, thank you very much, Ilia. Thank you very much, and wish you all the best in this project. I hope we can speak to you very soon about all your development.
Thanks a lot. Thank you for your time.